Okay, welcome again. Welcome to San Francisco's very first webinar. Like everybody else, your favorite late night show host, your favorite entertainer, your favorite president, even. I think everybody's moved online, and so have we. Um, I hope all of you here, you, your families, your loved ones, are safe and sane during these very, very unprecedented times. Um, and unprecedented times call for unprecedented measures. And of course, today we're gathered to talk about the CARES Act, the coronavirus um, aid, relief, and the Economic Security Act that President Trump signed into law about 10 days ago, was it? Of course, there's more coming, but to talk about all of the provisions available in the Act sign on March 27th, what it means for us as individuals, as businesses, as part of this whole, the infrastructure of the country. Our two stalwarts, Nilesh Shah, super successful investor, corporate finance expert and advisor. He has over 25 years of experience, both here in the Bay Area and in India, advising corporate houses and HNIs. Our second panelist for the day is Sanjeev Gupta, who probably needs very little introduction for those of us here in the Bay Area. He runs a very successful practice, a CPA practice, and an advisory practice with 4 offices across the Bay Area: Fremont, San Jose, Pleasanton, and Sunnyvale. So I'm going to turn it over to the panelists in just a few minutes. They will be giving us an overarching idea of what the provisions of this act are, and like I said, how it's going to impact us as individuals or as businesses. A few house rules. The webinar is about an hour long. The first 30 minutes will be devoted to both Nilesh Shah and Sanjeev Gupta walking us through the provisions. So it'll be 15 minutes each, and they will be talking to us about it. And the second half hour will be devoted to questions that we have received. Thank you very much to all of you for sending us your questions. We have a nice file, a nice stack that we will be putting to the panelists today. Participants will be on mute, and we request you to please stay muted so that, to make it a pleasant experience for all of us. My co-host today is Vice Chair Sudha Michael, and the both of us will be taking the questions you give us and posting it to the panelists. Now, you may have questions as this talk progresses. We invite you to use either the chat button or the Q&A button there to send us your questions, and we will use this channel, the chat channel, to then collect up all your questions and present it to our panelists here. So that's it from me. Remember that this is just guidance. You can address each of these panelists separately as in later, not now, but to ask individual questions and to get more pointed advice. This is just overall guidance that I'm sure will be very useful, but is no substitute for professional advice tailored to your needs. And with that, I hand the mic over to Nilesh Shah, our first panelist for the day. Thank you, Nilesh.
Thank you, Geetha. It's a pleasure to be amongst all of you once again. I've been participating in a lot of ICAI events, but this is the first online webinar. It's a new experience, and I hope we have many more such events in the times to come. Before I dig deeper into the CARES Act, let me begin by sending my sincerest wishes for the health, safety, and well-being of everybody who is listening on to this call. May God bring us out of this crisis unscathed, and may all of us come out of it with more strength and vigor in the times to come. As Geetha said, these are unprecedented times. The coronavirus pandemic has created an unprecedented challenge, and therefore, the United States government and governments all over the world have come up with an unprecedented policy response. If you were to look at the CARES Act, it's a $2.2 trillion legislation. Um, I may be wrong, but I think it's the single biggest piece of financial legislation ever created by any government in terms of the sheer size of the money involved. It's massive. It's phenomenal. But I'd like, before I delve deeper into the CARES Act, I'd like to step back a little bit and talk about the overall policy response that the government in Washington has done. Um, a- According to my calculations, the total fiscal impact that the government has done or is planning to do is approximately $10 trillion. $2.2 trillion was the CARES Act initiative. Today, on April 9th, they came up with a $2.3 trillion initiative. The Federal Reserve announced a comprehensive loan program. The Federal Reserve injected about $1.5 trillion in late March. And plus, there have been numerous other initiatives that the government has done in a very rapid, short span of time. So, to use Federal Reserve's words, they have acted proactively and they've acted decisively. Uh, if you were to look at the multiplier effect of all that stimulus, it's going to be easily about $10 trillion. So on an economy which is $20 trillion, and even if I were to look at a contraction this year, it may come down to like say 15 or $16 trillion. On a 15 to $16 trillion economy, a $10 trillion fiscal stimulus is massive. It's unheard of. There has never been something so big and so pervasive that I can remember. And why, somebody, you may ask, why is this being done? And in simple terms, the answer is very simple. It's to put money in the hands of the people. No matter which section of the society you belong to, whether it's an individual who's still working or it's an unemployed individual, student, a mortgage owner, a small businessman, a self-employed professional, small business houses, medium houses, banks, institutions, large corporations, and central banks. Every section of the society is being addressed through this multi-trillion dollar initiative with the sole objective of making sure that there is adequate liquidity in the hands of people. If you were to look at the past crises, you would have observed that liquidity was one of the biggest concerns. And thankfully, the Federal Reserve has and the United States government have taken care of that part. So having said that, let me just jump deeper into what does it mean for individuals. So there are many benefits to individuals under the CARES Act, but I'd like to talk about 3 or 4 key ones. First is the unemployment benefits. About $260 billion are earmarked by the federal government for unemployment benefits in such a way that people would get $600 more per week than what they would have anyways got from the states. They've also expanded the coverage to 13 weeks. And more interestingly, they've added gig economy workers, self-employed professionals, and a very interesting category, people who have voluntarily given up work because of coronavirus. So all of that means is that the total unemployment claims have reached 16 million, which is unprecedented. I know this word unprecedented is getting used a lot, but then that's what is the nature of what we are dealing with. So $260 billion for the unemployment insurance. I move to the second big piece of what the benefits for individuals is about $250 billion for rebates. In simple terms, it's free money which is being given to people, about $1,200 per individual for somebody who's earning $75,000 or lesser, $2,400 for a couple, and about $500 for each child. This is money which is obviously going to be phased out beyond a certain income level. But other than that, this is money straight to the people. And as I said, about $250 billion have been earmarked for that kind of direct transfer to people. The third big initiative that I would like to talk about is um, the overall benefit to students. The student loans in America are about $1.5 trillion, and it's all controlled by the federal government because they are the only lenders in that market. They've announced a moratorium for this category of loans. So this is going to leave a lot of money in the hands of the people who have student loans. There are also student loans, employee credits available. Uh, Moving forward, there is also a benefit available for mortgage owners, though that's not something which is covered under the CARES Act, but it's one of the policy initiatives that the government has announced, whereby banks are encouraged to provide moratoriums for mortgage payments to individuals who have a valid mortgage in these times of crisis. Uh, all in all, there have been other benefits also, you can now withdraw $100,000 from your retirement account without the 10% penalty. Um, of course, you have to meet some criteria where it says that either you or your spouse or one of your dependents uh, should have contracted coronavirus, or there should be some adverse financial consequences as a result of that. What it that means is that you can take out money from your retirement plan and then put it back over the next 3 years. So there are many other initiatives as well, but I think let me stop here a bit and pass the floor to my fellow panelist Sanjeev to let him talk about what does the CARES Act mean for small businesses, and then talk about the famous PPP program. I will take on more questions about individual benefits and challenges, in the latter part of the webinar. With this, I invite Sanjeev to talk.
Thank you, Nilesh, and thank you, Geetha. Thank you, Sudha, for organizing in a short period of time uh, this webinar for the benefit of all the charter members. Definitely, like Nilesh rightly point out, CARES Act has been a proper instrument given by the government. Uh, it's very instrumental in helping the small business to recover the payroll and other things to keep the employees going, keep their business going. Um, so I will not let me, because there are a lot of things I want to cover. I think that the time is short, but let me try to give pointers to you so that you can get understand how this CARES Act will benefit the business owners, and what are the important futures of those provisions as it relates to the business owners, and also the famous the PP programs and EIDL. So I will try to go there. Let me show some. Let me give some. I try to share some screen here. Uh, I'm not an I'm an accountant rather than uh, a techie person. But let's see. Let me see if I can share some screen here. Here it is. So business taxes, a lot of provisions have changed in the business tax rules, regulations. The important area for business taxes is the losses or the net operating losses. We know them very well. When a business suffer losses, uh, they are certain. The Tax Cuts and Jobs Act have limited the use of those losses to certain extent. Means that you cannot carry back, but you can carry forward 5 years. What the CARES Act has done, they have overlooked that Tax Cuts and Jobs Act. In that, they they are saying now you can carry back to 5 years the losses that you have in 2018, 2019, or in fact, if you make loss in 2020, you can carry back to 5 years. So I can have a loss in 2020, I can carry back to 14 to 15 tax year, 15 tax year, even when there's a statute of limitations. So that's a big benefit for business owners who have made a lot of money in prior years. They can do this. They can use these losses, which they can have during the 2020 tax year, they can use those losses to lower their taxes or maybe get a refund of those taxes. So
So,
it's very,
Sanjeev, sorry to
Sorry.
interrupt you, but your slides are not coming online.
Yeah.
I'm seeing your mail.
Yes.
it's not, slides are not there.
No, I can see your email,
Probably
but I'm
can.
not seeing your slides. We can hear you well, but not the slides.
Okay, let me see. Yeah.
Participants, please bear with us for a few minutes till the time we figure it out. All of us are learning Zoom and Zoho and WebEx these days.
Let me see. So the slides are not coming, huh? So that's something. Uh, this is coming.
I can see your mail. I mean, yes, no, we can see you now.
Uh, maybe.
Can we talk through this? We could share the, I mean, we can
Yeah, yeah,
distribute the
yes.
slides.
Now you can see.
Well,
Can,
yes.
Yeah, now we
yes.
can see. Yeah,
Yes.
yeah.
Yes.
Thank you.
So thank you.
Perfect, perfect.
I'm learning through the stages, like you correctly said. So yeah, so coming to that losses that people can, that one can benefit, the small business can benefit from these losses. They can use this loss to set up the income in, and you can take it to prior years, 5 years. Now the question that comes up here is, do we have to amend the return to claim those losses? Yes, you can amend the return going back as much as far as 2015, but there is a form that you can use. We call it 1045 for getting the refund in the current year. For 2020, you can file that form for any of those earlier years where you can where you have made a lot of money and you're taking those income and flowing to the personal taxes. So like S corporation and LLCs, C corporation, you can always use the form 1045. So you can use these losses. That's one thing, one important change. Second important change was a lot of business owners like S corporation, LLCs, when they have losses in their businesses, they were limited up to 80% of that loss they can use to set off other income like W2 income, interest income, the capital gains. Now they waived that limitation. Now all the losses from S corporation, all the losses from LLCs, they can use that loss to set off the income from other sources. What it does, it says that you can go back for tax year 2020, for tax year 2018, for tax year 2019, for tax year 2020. If you see any losses which have been limited up to 80%, now you can go back and amend those returns. So that's an important change for the losses with respect to 80% limitation has been taken out. The other thing is important for business, for real estate investors. What happened is, in case of in case of businesses, like you have a Schedule E where you show rental income and you show rental losses, which happens due to depreciation. If you have a lot of real estate and you have losses from real estate because you have depreciation, like you have a high value item, high value of the purchase of those real estate, and there's a depreciation on those one high amounts, and you are limited to $500,000 of that losses to be used against the other income like W2 income and interest income, capital gains, other income, business income. Now that 500K losses have been taken out, you can deduct 100% of that loss from the real estate to be set off against W2 income. So again, there are passive rules and their other rules are applicable, but again, this is bonanza for real estate owners who are really managing the real estate, and their their main forte is the real estate. The important area for other small business owners are employer payroll tax delay. 6.2% of Social Security Social Security tax, not the Medicare tax. You can defer it for the payroll run between March 27 to March 27 to December 31st. Any payroll run that happens between this period, any payroll tax, the employer portion of payroll tax, 6.2% can be deferred, and you can pay that deferment 50% by end of 2021 and 50% by 2022. So 6% is comes to a big huge amount. 6.2%, let's say your payroll is $500,000 in a year. 6% of $500,000 is around 30,000 to 40,000. Definitely you can defer that 15,000 you can pay it by 2021, and 15,000 you can pay by 2022. Self-employed people, for sole proprietors, self-employed people, they can use this, they can defer their self-employment taxes by deferring their estimated tax, by deferring their estimated tax payments likewise. Uh, Now, interest expense has also been increased from 30% to 50%. Now, how does it impact? A lot of business owners, a lot of C corporations, S corporations, they have debt, they have long-term debt, and if you're paying interest on those debt, earlier it was limited to 30% of your taxable income. Now they have increased from 30% to 50%. Important area is for again business owners with buildings in their assets, in their fixed asset, or they are using business buildings for running their businesses. There's a qualified improvements property depreciation that were changed. What happened under the Tax Cuts and Jobs Act, the qualified improvements and qualified restaurant property and qualified leasehold improvement, those three things were taken out under Tax Cut and Jobs Act from 15 years depreciation to 39 years. So they don't allow any bonus depreciation under Tax Cut and Jobs Act for those three elements. Now those things have been overlooked in this CARE Act. Now you're saying you can deduct 100% of any interior improvement that have done for a building which is inside which is used for a business. You can depreciate all those improvements up to 100%. So you can claim a bonus depreciation of up to 100%. So it's good for restaurant, it's good for hospitality industries. The change is retrospective to 2018. You can go ahead and amend 2018 and 2019 returns, and or you can file a form 3115 to just specify the change in method for depreciation. Employee retention refundable credit is another element where the employer can take about $5,000 credit, payroll tax credit against any payroll paid to an employee. Only one thing you have to be careful here is you have to specify that your revenue in every quarter is less than 50% as compared to prior quarters of the prior year. So it's easy to explain when you have of course the second quarter of this year the revenue will be much less as compared to second quarter of last prior year, or the first quarter of prior year will be much less as compared to a prior year of this current year. So when there's a revenue loss up to, like more than 50%, you can claim this retention credit of $5,000. Now this retention credit is allowed against employer portion of payroll taxes, against social security taxes, not against Medicare taxes. And you can claim this retention credit on Form 941. Now the IRS has not come back with guidelines on, I have not seen any line on 941 as yet, but it will be coming very soon. It's similar to what happened in 2011 when President Obama tried to give that payroll tax deferrals for taking care of the changes in the real estate that happened in those years. An important payment, important thing for business owners to take into account is Section 139 payments for sole proprietors. So nowadays, a lot of people are working from home. So if you create that setting home office like furniture, systems, internet, laptop, if you have employees working from home, and if you set up those things for them to work from home, what happens is you can claim those expenses as as regular expenses for business owners, provided they are sole proprietor, not for S corporation, not for C corp, not for LLCs, not for C corp, but as a sole proprietor, and you don't have to, and the employees don't have to pay anything. It will treat it as reimbursed expenses for them. So that's the business tax part of it. Then the important thing is how to, so from those two angles, I will say that the payroll deferral and the qualified improvements and the losses are an important aspect where cash flow can be coming in. Sorry. I think I so, so those things, those aspects are important for the part of, for the getting the cash flow, not only from the business loan, which we are going to talk about right now, but also from those aspects, the deferrals are important. Now, the important thing that a lot of people are asking today is about the business, small business loans. So we have two of those things. We have EIDL and we have PPP plans. In case of EIDL, the loan are given to cover the working capital. It's not only for payroll, it can be for any working capital needs. The loan can be up to 200K loan. You don't need You don't need any collateral. You don't need any documentation. But if the loan is more than 200K, up to 2 million is allowed under EIDL. They need collateral and they need documentation like income statement, other things, or tax returns to prove it. The payments are deferred over first 12 months. Over first 12 months, there's no need for any payment. The rate of interest is fixed as 3.75%. And for getting this EIDL, you have to apply on SBA.gov website. Now they're giving a $10,000 advance payment, which can be forgiven. Means you don't have to pay taxes. If you are any business owner that apply under EIDL, you will get an advance of $10,000. Even if the loan is not approved, you can get that waiver. It can be forgiven. Now, a lot of people have asked me this question. I have not seen money so far of $10,000 in their account, which is a good question. Of course, the SBA, when we talk to SBA, they're saying they are in the process of processing it, but right now they are not. They're not. It will be coming shortly in 1 week to 2 weeks. Most updated information on EIDL is they are processing it based upon per employee. Uh, so if you have 10 employees, they will give you $10,000. If you have 3 employees, they will give you $3,000. Max out is $10,000. That's what I've heard up to date on EIDL. Now with PPP plan, a lot of people had rushed to apply for PPP plan. It was administered very badly by the SBA, by the government guidelines. They tried to open it in a haphazard manner on April 3rd. A lot of my clients, I've been on phone since beginning of Friday, since beginning last Friday to this. I've been keep on phones. I've done a lot of webinars on this PPP plan. So this PPP plan is meant for business owners having less than 500 employees. Of course, EIDL also less than 500, PPP also less than 500 employees. But it is available for anybody having less than 500 employees. Uh, it is available for sole proprietors. It is available for self-employed people. But there are certain affiliation rules are there, which we'll talk about in the questions. If there's any question of affiliations, it takes some time on understanding about affiliation rules. But affiliation rules are waived for hotels and restaurants. So if you're hotel owners or your restaurant owners, the affiliation rules are not. So here every company can apply under the PP plan. The loan amount is given up to $10 million. For business in operation, how do we arrive at this loan amount? They look at the average monthly payroll times 2.5. For business not in operation, they look at average monthly payroll times 2.5 for payroll incurred between January and February 2020. For seasonal, the formula will be different. It will be 2.5 into average totally monthly payroll for 12 weeks beginning Feb 15. Now, the payroll cost is important. What is included in payroll cost? There's a conflicting information. We find different opinion in the guidelines versus what is there in the loan applications are different. For our understanding, we'll take line 2 of line 41 for each quarter, add the employee contribution to retirement plans, deduct any contribution over 100K paid to any employee, and add any employer payment for retirement accounts, medical benefits, or any other benefits. This will give yearly payroll which will be divided by 12 to arrive at average monthly payroll. And average monthly payroll multiplied by 2.5 times, that will give you the loan amount that people will be sanctioned. What I've heard from the bankers is any loan amount less than 200K, any employee less than 50 employees, any employee having less than 50 employees, they are processing much faster than I've seen one case which has been approved for PPP. Um, so the interest rate in PPP plan is 1%. The term is 2 years with payment deferment for 6 months. So there's no payment due. Let's say you have 2 year. This is a 2-year loan, and you can pay the first installment after 6 months. There's no collateral required. There's no prepayment penalties, no credit test, no guarantee fees. So loan will be provided not by SBA. It will be serviced by SBA approved lenders on a commission basis. There's some certain certification required. You need to, on the application, you need to certify a lot of things. A few things are listed there. What happens if a business have contractors? The question that comes up always is do one has to list contractors on people? The answer is no. The contractors can apply on their own. They can have their own PP plan. Now, any business, including self-proprietor, self-employed 1099s can apply under this. But for people who are 1099s, I think the application will start from April 10th, not for business owners with employees, which is already in progress. Some updates are there. Bank of America has been receiving a lot of applications. Wells Fargo has not yet started. The usual documentation that they're looking for filing the application is driver license. You need a driver license front and back, 941 for 4 quarters for 2019 or 940 for 2019. And they need a payroll register as on or around February 15. Those are the requirements they need for when you do the applications. The most important area of PPP is loan forgiveness. That's the most important thing. It's not getting the loan, but to get the forgiveness. That's the next step in the loan process. For doing the loan forgiveness, it will be based upon following three items, I will say. First item is the loan should be used only for specific purposes. Which are those purposes? Payroll cost, interest on mortgage obligations, incurred in ordinary course of business, rent on a leasing equipment in place before February 15th, payments on utilities provided they are in place before February 15th. So first is PPP loan should be used for the purpose. These four purposes: payroll cost, interest, rent, and utilities. Uh, the second thing is it should be the other two factors are the number of employees. First factor is number of employees, number of full-time employees in the covered period versus number in the same period the prior year. So if you're having, let's say in the first quarter of last year, you have 10 employees, full-time employees, you should have 10 employees in the second quarter, in the first quarter of this year. When we get the loan and 8 weeks, they look at the 8 weeks period following the loan origination date. So in the 8 weeks period, they look at the full-time employees you have prior year versus this year in the same quarter. They have to compute that full-time employees. There's some computation formulas we use. Uh, if you drop that number of employees drops, the loan forgiveness will be dropped by that percentage. The payroll cost should not be reduced by more than 25%. So if you're paying an employee $100,000 and you in that 8 weeks following the loan or origination date, that 100,000 gets dropped by 30%. Let's say 30,000 less. You say I'm going to pay you $70,000 yearly remuneration. So this exceeds 25% by 5%. Your loan forgiveness will be down by 5%. So that's what they're looking at. So we have to be really careful when we get the loan. We want to get the maximum forgiveness. So we have to look at the utilities of the loan. We have to look at the number of full-time employees, and we have to look at the payroll cost should not reduce by more than 25% during the 8 weeks following the loan approval. To apply for forgiveness, the lender will ask you the payroll record. They can ask you to check receipts and account transcript and other document to verify expenses. Uh, and they can ask for certified statements certified statement from you saying that whatever things you're providing are true. They have to do this decision within 60 days of the request. So whatever loan is forgiven, they will never be considered as taxable income to the borrower. Loan not forgiven, let's say the lender come back and say, I don't want to forgive the loan or based on the document you submit, then you can repay that loan within period of 2 years as per the guidelines, what is coming right now. Now, the important thing is, of all these things, IRS is getting some money from the government at last. So now IRS they are, like we have the cancellation of debt, there might be some document the lender will be providing at the end of the year to the IRS, like some kind of 1099 cancellation debt. That's what I believe in. So there will be IRS oversight on loan forgiveness and usage of funds. So very important that we use those funds in the right manner. It's not about manipulating it. We have to use that funds with proper documentation for keeping the employees going, for paying for rent, paying for utilities, paying for other expenses as provided in the guidelines, not for any other purposes. And this is for the PPF loan. And then let us take any questions. I will give it back to Geetha and then we can take it from there.
Thank you, Sanjeev ji. Thank you, Nilesh. That was very illuminating. Sudha and myself will go ahead. We have a stack of questions, like I said, and these are questions that are coming through now from participants. So we'll go ahead and post them right away. First question, and this is for Nilesh Shah. What do I need to do as an individual to claim the unemployment insurance payment?
Yeah, thank you, Geetha. I think it's a very simple task. You normally go when you file an employment claim, you just do that. The additional $600 is automatically added to it. So there is no additional step that you need to take over and above what you would have done anyways to claim the unemployment benefit. The $600 is just added on.
Thank you, Nilesh. Sudha?
I have a question for Sanjeev Gupta. What are affiliation rules for the PPP program?
Yes, so yeah, affiliation rules are very important to understand. So when we talk about affiliation with respect to PPP is meant with respect to common ownership and common management. So you can, if you have ownership more than 50% in another companies, that is a the affiliation rules will apply. That means you cannot apply for more company. You can apply in one company. You can choose one company where the payroll is the highest. Uh, then it comes to common management. The ownership can be less than 50%, but if you're managing the affairs of the management control is the same in one or more companies, then the affiliation rules will apply. In that case, you cannot apply for each and every company. Now, affiliation rules, like I said, has been waived in case of industries like restaurants and hotel industries, which are suffered the most. In that case, for those industries, you can apply PPP for every company that they own or they have common management.
Okay, Geetha.
Thank you. This is a question from Saravanan Subaya. If we have loss from an LLC formed in 2019 now, but earlier had business income from another LLC that was sold in 2017, can we still use the loss carry backward provision for this? I believe this is a question for Sanjeev ji.
Yes, so 2018, the loss in 2018 can be carried forward to 2019 and 2020, and you don't have to. There's no 80% limitation. Yes, you can carry forward to 2019 and 2020, or you can carry back 2018 to 5 years, 5 years period without overlooking. They can overlook the statute of limitation rules. They can do that. Yes,
Thank you.
So another question for Sanjeev Gupta. Can you include 1099s in the calculation of average monthly payroll for PPP applications?
Yes, a lot of people were confused on 1099s. In fact, a lot of clients called me also about 1099. They see the literature was wrong in a lot of areas because guidelines were saying something, and the applications, when they received the application, the bank regulation was saying something. So definitely, as per what we have right now, very clear instructions. You cannot include contractors who are not considered as employees in the when you calculate the average monthly payroll for PPP programs.
Thank you, Sanjeev ji. This next question comes to us from Ramakrishna Rao Dittakavi. Is there any difference between green card holders, H1 and citizens? Possibly for Nilesh?
As far as the rebates are concerned, the rule is that the person has to be having a social security number and should be a resident of the country, and then they should be able to get the rebate. Is what I have understood. The Act is not very clear about how unemployment works. The unemployment rebate works for H1B. To the best of my knowledge, they would not be included because that 600 is just an add-on to it. But this is my understanding. Sanjeev ji, do you have any other view on this?
Yes. So for when it comes to unemployment, definitely if you're an H1, it says you should have an authorization to work. If you can show the authorization to work and you can have that clear rules, you can apply for it. A lot of my clients they did get unemployment because they were able to document those things. When it comes to application for PPP programs, it's not based upon your immigration status. It's based upon your business model. So if you have a right business and you qualify under the standards, you can always apply irrespective of what status you are in. You can apply on H1 for this PPP program too.
Excellent.
Thank you.
So we have the next question from Basant Kumar Dugar. how to enhance productive PPP loans with multipliers and how to reduce non-productive PPP loans.
Well, productive PPP loans, like what I understand is what the intent of the questionnaire is, question will be, uh, is productive is how to multiply the average monthly payroll. So how to maximize those things. Well, the thing is we have to be very conservative. Like I said, we have to use the line 2 of the 941s, which includes everything. Uh, it's a gross payroll cost, and then then we include the employee contribution of retirement account. And when the loan is sanctioned, we have to use the loan the way we want for 8 weeks period. Means the way the guideline says for 8 weeks, like for payroll cost and rent and utilities. You cannot use that money for refinancing your existing debt. You cannot use that money for starting investing in real estate or investing in stocks. You cannot use it, you cannot do all those things. If you use those funds for those purposes, will be treated as a fraudulent use of those funds, because they are meant for business owners to keep their business running, to keep their employees running.
Thank you. Another question coming your way, Sanjeev ji, and this is from Nirja Surya Devara, who says, payroll tax deferral, is it available to all employers?
Yes,
yeah.
Is available to all employers, but we have to understand a few things here also. It's available to all employers for deferment as long as they don't get any loan forgiveness under PPP program. So if you apply for a loan from PPP and you get a loan forgiveness under PPP program, then you cannot claim this employer deferral of payroll taxes or employee retention credit of $5,000. If you don't get a loan from PPP, or you get a loan from PPP and you don't get the deferment, you don't get loan forgiveness, then you can still use this deferral of payroll taxes and also retention credit of $5,000 per employee.
Right. Prior to this talk, we had received a bunch of questions on how the loan forgiveness program itself will work, the criteria, but I think you were very exhaustive in dealing with that subject. So participants, if you should have further questions on the criteria for loan forgiveness, please send us a note. But if not, I'll just pass this over to Sudha.
So I have the next question for Nilesh. It says, what do I need to do as an individual to claim the unemployment insurance payment?
I covered that early in my earlier response, is that you just do what you would have normally done to claim unemployment benefit. That additional $600 would automatically get added. There is nothing additional that you need to do beyond claiming the first unemployment benefit. That 600 would be added on.
Okay, so let me go and ask another question to Nilesh. It is, what do I need to do as an individual to get the rebate from IRS?
Yeah, that's a very common question that I've been hearing. And the answer to that is, frankly, if you have already linked time of filing of your taxes, you do not need to do anything. The IRS and the federal government will automatically transfer that money, which you are eligible for, to your bank account. They will either use your 2018 returns to check whether you're eligible for it. And if you've already filed your 2019 returns, most of us haven't, but if you have, then they will use 2019 returns and the income declared in it to determine your eligibility. But you do not have to do anything. It'll all happen on its own, and the money should come to your bank account on its own. If you've not linked your bank accounts, then probably checks would be mailed, is what I have understood till now. Yeah.
Thanks, Nilesh.
Thank you. This is a question for Sanjeev Gupta. Is there any preference given by banks for processing applications for PPP from existing customers?
Yes, always, because as per the guidelines for this program, they always prefer, they are given, they are said as per the guidelines, you have to go to the bank where you have existing relationship, not only business banking relationship, but also borrowing relationship. So if you have those borrowing relationship, if the bank should feel good, like they have all the document, they know you as a customer, so they will be able to process faster than non-bank banking customers. So always go to the bank where you have the relationship. Don't try to file multiple layers, multiple places, PPP applications. That's not going to work because it's tied up. It's going to the SBA and is based upon the EIN number. So multiple application will be rejected, and the cases are they are looking at this very carefully. So just go ahead and be patient with your bank. Like I know a lot of Wells Fargo bank customers chase online, and Citibank even not yet started. The new things are coming up. New banks are coming up. Like I've heard of SV Bank, Silicon Valley Bank, other banks are coming, opening up. In fact, Intuit also, QuickBooks. I thought they're also starting something. Sure Payroll also started something. So everybody's trying to start something, but just apply with the bank where you have existing relationship.
Thank you. Um, Another question for you, sir. We spoke a lot about like the real estate industry and the hospitality industry benefiting from these PPP rules and EIDL rules. Question, what are the options for landlords when renters cannot pay?
Yes, so from a tax point of view, if the landlords are facing this dilemma that renters are not paying, when on their tax return, they can claim this as a loss of rent, of course. And like for them, there's a qualified loss of rent. They can take those losses, and then if they have qualified improvements, QIP inside their buildings, if they have done improvements in some remodeling or something inside, they can take 100% bonus depreciation. Combined with those losses, they can set off their other income from other sources like W2 income, interest income, other income. So it's a bonanza for real estate investors. They really have to look into it. Uh, Again, thanks to President Trump that he likes real estate so much. So this provision was built in also.
I think there is a merit to do a formal webinar just on real estate investors. You know, when I read the whole CARES Act and all that they've done, it's a bonanza. That's the right word.
Sudha, no questions.
I have a question about the retirement plan that Nilesh was alluding to earlier. It is, how can I make a withdrawal from my retirement plan?
So this is a question I believe it refers to the facility to make $100,000 withdrawal from your retirement plan. Uh, so first of all, you need to check whether your plan allows that, and you need to follow whatever is the process that that particular plan administrator has decided. You can withdraw that $100,000 provided you have the three conditions being met. First is that the plan allows it. Second is that either you or your spouse or your dependent has had a COVID-19 infection, or there is a financial difficulty that has adverse consequences have happened in your family because of COVID-19. If you're able to fulfill these conditions, you can claim $100,000 withdrawal from your retirement plan without paying the 10% penalty. You can keep that $100,000 and use it for your whatever purpose, but make sure that you return it back within 3 years of taking that disbursement from the retirement plan. That's the framework that you need to follow.
So Nilesh, on this, just a follow-up question. Does it specifically say retirement plan, which means like the 401ks, the IRAs, or can other like a 529, or you can tap into those kind of other funds also?
I haven't heard of 529 being included. Sanjeev ji, have you heard of 529 being included in this?
No 529. It's
No.
only for retirement account, DB plan, defined benefit plans. All this, yes, all this.
Okay. Okay.
Well, for the education side, they've obviously given you the student loan deferral benefit. So, that is one impact. And there is also the student loan employer credit that is available till I think $5,200 per year. But no, I don't see any tweaking of 529 framework as of now.
Okay. Thank you. Go ahead, Geetha.
Question for Sanjeev Gupta ji. Can I include a new employee hired in March 2020 to apply for PPP?
Yes, anybody, any new hire you can include. That's not a problem. As the question is about usage of the fund after you get the PPP. So yes, you can hire as many people as you want. That's the program for guidelines for hiring people. keeping the consistent payroll.
Right, right. Another question comes to us from, and you touched briefly on this. Can one apply for both EIDL and PPP at the same time? What are the complications involved?
Yes, so EIDL, so a lot of companies are there which are startup companies. Startup companies should not, they are taken out from PPPL. Now, like we are hearing today, the Federal Reserve has given the stimulus of 2.2, putting money, $2.2 billion putting in that, and they are giving a main state loan program for employer up to having up to $10,000 of employees. So in that they can apply it whenever that guidelines come. We are waiting for those guidelines. The startup company can apply under those programs, but they cannot apply under PPP, but they can apply under EIDL. EIDL is for any working capital requirement. PPP is only for running payroll, paying rents, paying utilities, and that's it. Nothing else. Not payment to contractors, not payment to for repayment or any debt or something. So it's not for there. EIDL is a payable in 30 years. Installment is payable over 30 years. This is only for 2-year term. PPP is fixed at 1%. That is fixed. EIDL is fixed at 3.75%. EIDL is based on credit score up to 200K. Whereas PPP is based upon financial information, like 941s, other things. So if one should apply under both EIDL and PPP. If you apply under both, and if you're lucky to get both, EIDL has to be refinanced into PPP. It can't be that you can use both the funds simultaneously.
Excellent. Follow-up question. Is the PPP available for 100% foreign-owned entity from Divyang Shah?
Yes, so PPP is not available for foreign-owned entity. Reason for that is they are looking for business owners in the US. Now, of course, we can come back and say that the business is running in the US, but if it's owned by a foreign person, and that person has a tax ID number, that's where the issue comes in. They don't have a value social security number. So, in my understanding, I don't think they can apply.
Right. Sudha? Any more questions there on your
Here is a question from Sagar Kota. Can PPP loan be used for paying interest on existing business term loans? This is not a loan on property building. Can this usage be used for forgiveness purposes?
Yes, so everything and anything relating to business, not relating to real estate. Now, if real estate is as a part of business, like you're actually managing it, you're putting like more than 750 hours in running in those business, those real estate, then it becomes a business. And in that case, yes, if there's a debt for doing that business, holding the real estate, yes, it will be treated as interest payment under PPP as per the PPP guidelines existing debt. If you're not a active real estate, just passive, just working on W2 or having other businesses, then definitely that will not be counted under PPP.
Excellent. I'm going to ask one last question. I know we only have a few minutes left. I don't know, Sudha, if you have any others beyond that. But my last question, and this one is for Nilesh, is how can I, as an individual, get a mortgage deferral? What would the process be?
You have to, mortgage deferrals are being offered, and I think the process is very simple. You need to approach your banks and request that. You need to call your helpline, or you go, if you have an online banking with them, then log in and request for a deferral. I haven't heard of any of those denials taking place. So be assured, just go online and request for it, and it will come through. It's a simple process, and it won't affect your credit score in any manner. It will not be reported on your credit report. So I think that it's perfectly safe to do that. Simple and safe.
Thank you, Nilesh. Sudha, over to you.
And maybe I can just do one more question that is coming here from Sabina D'Souza. Question to Sanjeev ji is, what regulations apply for non-profit organizations with PPP payroll and distress relief financing?
Yes, so regulations are clear for non-profit distressed organizations. Definitely, they can same rules applies for them. So they can look into the criteria for applying under PPP. Bank guidelines are different for non-profit as per the guidelines from SBA, and the government is different. So the same guidelines applies. They have to for non-profit. You have to be careful that the payroll that you're running are running for those members who are actively engaged in non-profit, not for the board of directors, the people who constituted the non-profit. So just be careful on that account. Other than that, everything is the normal thing.
And here is one specific question. I'll just ask that, coming from Mahesh Srini. It's on unemployment insurance. For existing folks already on unemployment insurance since December 2020.
I think he means 2019.
2019, I would think. Will they also get the $600 additional for the time period till July?
I think this is for Nilesh.
Yes.
They will get the additional 600. They can apply for, seeking the additional 600. Yeah. Okay, I think we have exhausted, most of the questions we tried to take.
So,
and
I'd like to make one closing comment here before we end. Is if I have the permission from.
Yeah, go ahead.
Yeah. So I would like to say one thing that, to take a step back and see that this whole stimulus program has created unprecedented opportunities for all of us as finance professionals, as investors, as advisors, as well as, employees of finance departments. There is a lot of opportunity to help ourselves, our families, our businesses. So take a deep look into the CARES Act and the stimulus program and see what best we can do for ourselves. What are the various benefits that we can avail of? At the same time, also look at your own investment portfolios. Look at how the markets are changing. This is a right time to take a fresh look at what investments you've been doing for yourself. It's the right time to look at the balance sheet of the company that you're working for. This is the time for you to reevaluate and make sure that you make most of the stimulus package that is being offered to you. This is all I would say. It's a wake-up call for us. While we all are trying to be healthy and safe, we should also focus on our financial health and fitness in these times. That's something which I want to encourage everybody to do so. Yeah, over to you, Geetha.
Well said. Here. Sudha?
That is a great closing comment, Nilesh. You're right, as we are taking care of our health. And that is why we wanted to bring this webinar to our team and as an outreach also. And we are really hoping that we got it started. I want to thank both the panelists that just have a lot of breadth and depth knowledge, and we tried to address as many questions as possible. And we want to bring more of this as more monies are coming and more understanding is there for us on how these things are unfolding. We will be bringing more, and with the shelter in place, we will be doing this webinar format for quite some time. So thank you, panelists. Thanks to all the audience. And I definitely want to thank all our sponsors who are the people that enable us to bring these programs to you. So we have the ICAI San Francisco Gold sponsors, Eisen Hamper and Anand Bhuvan. Thank you. We have Sanjeev Gupta, who is our silver sponsor. Thank you. And we have the bronze sponsors, Chug, AppWrap, Bhatia and Company, Harshwal, Right Comply, and ARightGo. Thanks to all the sponsors, and thanks to everyone for attending the seminar, and take care, keep safe, and stay healthy.
Thank you.
Thank you.
All. This webinar will now end. Thank you.
Thank you, everyone. Bye.